What's going on, guys? Welcome back to the channel. In today's video, I got a great one for you. We're going to be talking about a lot of those questions you may have when you're just entering the stock market. I've been getting so many people reaching out to me on Instagram, on Twitter. Hey, how do I get started investing? How much money do I need? And how many stocks do you buy when you're first starting? What stocks do you target? I'm going to be answering all of those questions in this video here today with the aim of just easing some of those nerves you may have about putting more money into the stock market. Maybe you've started, you're not getting your desired return. Well, hey, let's address that too. So without further ado, let's just jump right in. All right, listen, if you guys are brand new to the channel, hey, my name's Dalton. This is dlitztv, and on this channel, we talk about all things investing. I am on the way to financial freedom through dividend investing, and I'm pretty sure that anybody else can get there too if I can do it. So if you are joining for the journey, you guys have been following along, I want to say thank you. But if not, consider hitting that subscribe button, turn the bell notification on, and pretty soon here, we'll be sipping Coronas over on the beach. So I just want to show you right up front one of my portfolios here. This is my Robinhood investing portfolio. Over the past year, you can see it's up 17%. This portfolio alone focuses on dividend payments. If you have no idea what the heck a dividend is, it's basically an incentive that a company pays you for holding their stock. If they do well, they get a profit, they pay it back to some of their shareholders. So those are the types of stocks that I target. Not every single stock offers a dividend payment. A lot of companies will, instead of paying dividends, they'll keep the money within the company, try and grow it in other ways. But you know what? It just helps me ease my nerves about investing. It helps me just knowing there's a common steady flow of cash coming in. And as you guys know, I'm just relatively conservative when it comes to my investing. So one thing about this, the 17% return doesn't take into account the fact that I am reinvesting dividends. So as these dividends are paid to me, I put it back into the Robinhood application, into the same companies that are pretty much paying me these dividends to grow them that way. So it doesn't really show that return. The 17% is misleading. It's actually higher than that. Now, when it comes to investing, do I recommend people get started with dividend investing? I think it all depends on what you think about the topic of dividend investing. There's some drawbacks to dividend investing, like you got to pay some taxes that you may not have to if you are investing in growth companies that you're holding for a very long time. But if you invest in something like a Roth IRA where your money is going to grow tax-free, it eliminates all the negative impacts of dividends being paid. So definitely consider investing in a Roth IRA if you're just getting started with dividend investing. I've got videos out on that if you want to check it out. But one thing I want to address is how much money you need to get started with. How much money did I start investing with? And it's a really actually pretty simple question to answer, because if you scroll back, you look at some of my beginning videos, you'll notice that I started investing on this channel with just $100.
So the first thing is that we're going to be taking an initial investment of $100 and seeing how big we can grow this.
You look at this $21,000 portfolio and you're like, how the heck did he start from 100 and make it that far? Well, consistency is the biggest factor into it. So I've been investing for a long time now. It's been years of building this portfolio, and I've been ramping up the payments that I've been making. Typically what I try to do is invest $100 every single week. And I just want to say that if you guys are wondering how much money you need to get started investing with, even if I had $5 to my name before that I could put into the stock market, honestly, I would have done it. The most important thing about investing is getting started, because time is the most important factor when it comes to investing. So the more time you have, the better returns you're likely going to get if you're investing in the right way. And there's a lot of great stuff that goes along with it. So you might be looking at your funds and you're like worried. You're like, I don't really have that much money. If I had an extra dollar, I would put that into the stock market just to get started. The thing is, you're going to catch a bug. You're going to see your money growing. And if you're investing in the right companies, as you see the money grow, you're just going to be all over it. You're going to want to watch the money grow. It's super rewarding and honestly addicting to just go in, check your portfolio and see how you're doing. Now, I like to take the stress out of investing. I try not to look too much into my portfolio. That's why I target these companies that don't require much work. You'll notice in that Robinhood investing portfolio, those are companies I'm going to hold for, 20, 30, 40 years, hopefully never have to sell, and they're going to pay me for holding them. So in my mind, it just seems to make sense. But one thing that I want want to cover is a lot of people, when they just start investing, one of the best ways that sort of eliminates a lot of the risk to investing is investing in an ETF. If you have no idea what an ETF is, it essentially works as a basket of stocks, which is going to diversify your money for you. And you don't need to be worried about being overvalued in certain areas if you're investing in the right ETFs. What's my favorite ETF? VTI, which is Vanguard's Total Stock Market Index. Check them out. This is VTI. Again, it traces how the overall stock market is performing. So if you look at the past year for this, right, I had around 17% in my dividend portfolio. This is up 42%. So a year ago today, if I were to put all of my money into this portfolio, I would have only been up 17% on my investments had I invested in my dividend portfolio. But had I invested in this ETF here, I'd be up 42% on that money. And that's, again, if you put it all in at once, right at the beginning of the year. So it kind of matters where you're putting your money in. And that's why dollar cost averaging, or putting money into the market over time, is one of the best ways to mitigate a lot of the risk that you have. I've invested lump sums of cash while the market was at all-time highs, and then immediately after it tanks. Well, if I had just spread out the payments that I made putting into the stock market, then I would have been able to get a much greater return on my investment. So that's one of the mistakes that I've made in the past, and I think it's important to note. Another thing I think is really important to say is that this isn't my only investment account, right? I love dividend investing for many different reasons, but it's not the only way that investing works. There's so many different strategies, so many different methods out there. And not only do I have a dividend investing portfolio that is my aim to be able to get the dividends to cover all my living expenses so I can live financially free, but I've also got a couple growth accounts that are similar in size to this Robinhood investing one. And I continue to grow each one at a pretty decent rate, where I'm putting a lot of money into them at this point in time, and continuing to grow them. So you might be wondering, hey, do you ever get nervous about putting money into the stock market as it's getting too high? And my response to that is not really, because I'm so consistent with the amount of money that I'm putting in. If the market is doing really well, it's going up really high, it doesn't matter, because I'm still investing as this is going on. And then it might tank, but I'm still investing as it's tanking. So it's going to go down. I'm just averaging the money that I'm investing. And overall, it's going to do wonders for me in the long term. So if you don't want to take that ETF route, you want to go for individual stocks. Well, what can I say about that? I'd say, slow it down. Take a step back. Let's think about companies that you use on a day-to-day basis. Do you use Microsoft products? Maybe at work, you're doing some work on Word, Excel, all these different programs that Microsoft has. And that's a product that's great. Maybe you got an iPhone, right? You got an iPhone, you got some Apple products, a MacBook. That's another great company to look at. Just think about the day-to-day stuff that you do, and most of these companies are going to be pretty well established. One route that I typically look, especially when taking the dividend route, is looking for dividend kings and dividend aristocrats. These are companies that have been increasing their dividend payments for, over 25 years and over 50 years. And it's just an important route to consider, and it helps getting your money into the right places. And then I'd say, as you get more familiar with the stock market, as you get more comfortable and you're understanding trends, you're understanding the ways that these companies are actually valued, then that's when you can start branching out, going after some of these riskier plays, knowing that your money could be lost somewhere in the process. The thing about investing and trying to grow your money in that way, nothing is guaranteed. Like, absolutely nothing. I could invest all of my money, and the next day I could lose it all, depending on what companies I'm putting it into. And that's why I think ETFs are very important. And if you hold over the long term, I'm talking 10, 20 years, it's likely you're going to be profitable. It's very hard to find a stretch of over 10 years where you put your money in 10 years ago, and if you never added anything at the end of that 10-year period, it would be negative. It's really hard to find time periods that are like that. One thing really important to understand that a lot of investors come into the stock market without a general knowledge of is expectations. Expectations of timeline, I think, is the most important thing. It's likely that you get turned on to investing because of these success stories you hear. People invest, all of their life savings into Dogecoin, and Dogecoin jumps up and goes really high in value, and they make millions and millions of dollars off of it. Now, these success stories are turning a lot of people onto the investment realm, but this is not going to be you more than likely. This happens to a very, 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 it's like playing the lottery, right? The chances of this happening is super slim. And I think it's definitely overpowered by the failure stories that you don't hear. And so I think the sooner you can get that stuff in check, and the sooner you can get yourself onto a solid foundation of investment principles, that's when you can get the greatest return on your money. And so I want to urge to you guys, if you have any questions whatsoever about investing, building portfolio, structuring, please, leave a comment in the comment section down below. Reach out to me on Instagram. I'd love to hear from you guys. Thank you so much for checking out this video. I hope it did answer some of those beginner questions that you may have, and look forward to hearing from you guys. Thank you so much. Have a great day. If you made it this far into the video, I want you to leave a comment. I got a quick question for you guys. Are you a Hydro Flask user or are you a Yeti mug user? I got a big qualm with Hydro Flask because listen to this. It sounds like there's a rock in here. And this is my second Hydro Flask. The other one actually got mold in it somehow. I promise you I was cleaning it. This Yeti mug here, love it. I'm a big Yeti fan. Team Yeti, let's go.